Hey, what is up, you guys? What's up, YouTube? Um, Figured today get a lot of questions about stock market terminology, a lot of different words that some people don't understand, different terms for trading, investing, different things for options. That's a lot of them. So why is my cell phone flashlight on? Makes no sense. So I figured I would just do a live stream for it. So this way, if you guys have live questions on like, hey, Pete, I don't know what ITM is or OTM or head and shoulders. Like, I don't know what any of that is. This way, you guys will have an understanding of it, a better understanding. So that is the plan. That is what we're going to be doing today. If you guys have any questions at any time, um, put them in the YouTube chat. Also, hit the like button if you're new. Welcome. Subscribe to the channel. Your boy got sunburnt too. Pretty bad. So it happens when you're pasty as hell. But cool. So, are you going to be on Discord? I wasn't planning on it, but I can. Cool. All right. So, I went online. I was gonna make my own, and I was like, you know what? Like, I'm just gonna make my own thing on a whole bunch of different. Actually, I need to separate this on a whole bunch of different terms, and I was like, why would I do that when I can just go and find something that somebody else already did? What just happened to everything? There we go. Somebody already made one. So this is an amazing one. I'll put this in the link if you guys want, but this is from MarketBeat. So shout out to MarketBeat. And so what I'm going to do is just go through these. And if you guys see one that that I think is important, we're going to go through. I'm going to explain it to you in their terms and then in layman's terms. And if you guys have any questions specifically on something else, let me know. If it's something that's not really important, I'm probably not going to talk about it unless you guys are like, hey, Pete, why did you skip over, XYZ? For those of you who are in the private academy, I'm getting sidetracked here. I need to get this back up. For those of you who are in the private academy, you do know that there's a little cheat sheet area. And so that is where I have all of my stuff set up to where you can actually go and look at the market terminology thing that I posted up there. But that's not more towards trading, it's more towards long-term investing. So let's go through these. There's 201 of them. So I'm only going to go through the ones that I deem are important. So like 12B to 1 fees, it's not really, it's important, but I get a lot of questions on ones based around like actually trading. So 52-week high, that is the high that is given within a year. So, normally if something's trading at a 52-week high, you're not going to trade it to the upside. That doesn't make sense, right? It's overbought. Matthew, what's up, bro? A wash roll. Okay, so for those of you who don't know, that is a tax term, what's called a wash. So say you were to buy, it happens a lot when you're trading the same stuff. Say I were to buy Uber today for $30. I don't know what it's worth, $30, and then I sold it later in the day for $29. I took a $1 loss per share. Normally, what people think is that $1 loss is accounted as a loss on your taxes. But if the next day you trade Uber, or within 30 days from the initial trade, if you trade Uber and you make that dollar back, that doesn't count as a loss the day before. That's just a wash. So you don't get that tax advantage. So a lot of people try to trade different things. Like the wash roll's really not that crazy unless you take a monstrous loss. But it's something to definitely know about. So good one, Matt. So 52-week high, we talked about 52-week low, is kind of the same thing. Accumulation and distribution, we don't have to really talk about that. After hours. So this is one a lot of people have questions about because after hours is dependent upon what your broker does. So if you have Robinhood and you have Robinhood Gold, you can trade. Their pre-market is 9 a.m. Eastern Standard Time to 9:30. Their after hours is 4 p.m. to 6 p.m. Now on TD Ameritrade, I can start trading at 5 in the morning. And I can stop trading at 8 p.m. Now, I don't ever really trade after hours. There's not enough volume to even make it really kind of worth it. Matt, yeah, I tried getting a better buy on CCL 1218, but since I had taken a loss, they changed my price to 1401. Yeah, wash sales do kind of suck. Analyst ratings. Basically a rating that an analyst gives. Is this a buy? Is this a hold? Or is this a sell? I don't ever go by them. You got to realize these people get paid to make up crap. Like if an analyst calls out Uber, great buy, lists their reasons, and it ends up dying, did they get penalized for it? No, they're not held accountable for anything. Now, if I say, hey, Uber's a great buy and it dies, you guys are going to discredit my voice. I could lose, the academy, and I could lose my, because you guys know me on a personal level, I could lose all of my trust with you guys, my honor. So like that's what's more for me. ADTV is your average daily trade volume. So say a volume on a stock is like 1 million and today is trading at 10 million. Obviously it is going to be higher than normal. There you go, Leah. I posted it for you. You can go through it if you want, guys, live. I put it in the box. So if you guys want to go through it live with me and you're like, hey, I don't really understand what that is, or if I skip something, you can be like, hey, can we actually go back over it? A balance sheet. So a balance sheet, by their terms, is an accounting of a company's assets and liabilities and capital it receives from a shareholder. So yeah, a balance sheet is very, very important when you are long-term investing. It's basically like, hey, how much debt and how much assets do they have? And a bad balance sheet is not good. It's like, everyone has their own balance sheet. It's like if you are making $1,000 a month, but you're spending $2,000 a month, you're not going to be in business for a while. A bar chart. A bar chart is basically a visual representation of a particular security change over time, or a candlestick chart. Bear market. Now, this is actually one that we should go over the dictionary form, because a lot of people think that if the market sells off, it's a bear market. That's not true. Same with a recession. So people think a recession is like, oh, a recession by the book, right, is when GDP, which is gross domestic products, decline 2 quarters in a row. That is a recession. So for everybody right now who's like, we're in a recession, we're not in a recession textbook right now. It looks like we're going to be, because we've only had 1 quarter of GDP right now since this has started. But a bear market is when the market has declined by 20% or more during a 2-month period or beyond. This is called a bear market. It's common for pessimism, fear, and other negatives. So when someone says, I'm a bear or I'm bearish, that means they think it's going to go down. If you're a bull or bullish, that means you think it's going to go up. So if I say, hey, I'm bearish on Tesla, that means I think Tesla's going to go down. So a beige book, comes out 8 times a year. You guys who understand the economy more, this does affect the market, and this is basically an indicator of the U.S. economy. A bid-ask spread. Talk about that a lot. That is with any stock or any option. You're always going to have here, you can see this, a B and an A. A bid is what someone was willing to pay for it, and the ask is what someone is willing to sell it for. Now with options, sometimes you'll have a spread, and that's what it's called. Say somebody's trying to buy at $1 and they're trying to sell it $2. That's a huge spread. You don't want to trade anything with a gigantic spread. This is great. Black swan. So I can't say the word because we're public, but that is Rona. A Rona situation is a black swan, right? So a black swan is used to describe a rare, unpredictable event that triggers a perfect storm of catastrophic consequences. So let's say unemployment numbers rising. That's not black swan. That happens. A black swan event would be a hurricane that tears apart half of the United States, or the Rona, something like that like is a once in a lifetime situation that came out of nowhere. That's a black swan. Blockchain, I don't really understand too much, but we can go over that. This is decentralized digital ledger, providing secure record of digital currency transactions through a blockchain. Started out. You know what I'm actually going to do? Before we do this, I'm going to ask Plaguescape. He's a part of our community. He's the king of crypto around there. I might ask him just to do a stream all on crypto for a lot of people who have questions. So I'm not even going to talk about blockchain. I don't understand it to the level that I understand everything else. Blue chips. So blue chip stock is a big company, usually a gigantic market cap of over $5 billion, and a quality lasting company. So a blue chip stock would be like Coca-Cola, airlines before they died, like a Delta, like something along the lines of that. These companies tend to be household brand names. So like J&J, Procter and Gamble, these types of companies that like really aren't going to go anywhere. They're pretty safe. I trade, my strategy, for those of you who are new, my strategy is based around primarily trading options on blue chips. And the reason I do that is because the options give you the ability to have more riskier positions, but blue chips are easier to predict where they're going, right? So if you're trading penny stocks, it's very hard to predict where a penny is going or a pump and dump is going, but it's pretty easy to predict where, say, where like J&J is going to go. It's easier to predict those. Bollinger Bands. This is an indicator. I talk about them a lot. This is a way to analyze relative stability or volatility of a particular security by showing its price activity within bandwidths. So for those of you who don't know, I use a TTM squeeze, but basically you'll have a band on either side of the chart like this, and then every time they come closer, geez, I don't know if you guys could hear that, but that was loud. Market's closed. Every time they get closer, it shows that a squeeze is coming. Let me check my positions real quick. BYND died a bit today. Whoo! What the freak happened? Robinhood is terrible. I talk about it all the time. Wow, holy crap. BYND, my puts were almost even. I'm up on them, but it ripped like 10% in the last minute of the market. Cool. I'm happy, guys. Bull market, we talked about that. Bonds are not really worth it anymore. If you're going to invest long-term, bonds aren't bad, but make sure you get a government bond because the government will always pay their bills or they will print more money. Also, guys, hit the thumbs up button too. Really helps the community. Buy rating, kind of talked about that. That's something like an analyst will give, like, oh, buy this stock. It's a buy, it's a hold, it's a call. I mean, it's a sell. Here, call option. If you guys don't understand options, let me actually put this here. It's kind of weird typing your own name into YouTube. I will put this here for anybody new. This is a basics video on how to understand options. So if you don't understand options, there is a video for you guys to learn from. Call option, basically, in layman's terms, means you're buying an option and you think the stock is going to go up. Therefore, a put option means you think that the stock is going to go down. Candlestick, a technical indicator showing investors the opening and closing of a price. So I will make a full video on candlesticks, how to read them, different types of candlesticks. I'm going to make that in the future, but these are what candlestick charts are. For anybody who doesn't understand, everybody in our academy should understand, but this is what a candlestick means. With the green ones, they open here, and at one point it went down, and then it went up, right? So the green ones open low, and then they go up. The red ones open high, and then they go down. I'll make a whole video on that. So if you want to learn how to read candlestick charts, make sure you hit that subscribe button, and we will make a video on that probably sometime next week. It's a big question I get asked a lot. My goal is just to build up the content library so that if anybody ever has a question, I can be like, hey, go check out this video. Go look at this video. All that. Call option volume. So volume, for those of you who do not know, is just how many shares were traded that day. And so call option volume is how much volume there was on that call. You want to see a lot of volume on the call or on a put. You want to see volume all the time. More volume is better. Capital gains, the positive difference in value between assets and a selling price. The easiest way to say it is capital gains is the income that you make from selling an investment. You have short-term capital gains, which is if you buy and sell a stock within a year and you get taxed at the highest level. And then you have long-term capital gains, which is when you end up buying and selling a stock over 365 days, and I think that's as low as like 15%. Cash flow is just cash and cash equivalents a company brings in minus the debt. So it's pretty easy. Channel trading, this is basically just a channel or a range that a stock is trading in. So see, I always use this, but if we look at Boeing, before we had this big crash, and we put a price level here, and we put a price level here. You can see this is a channel. This was trading between a channel. There are a whole bunch of different ones, and we can make more videos on that. And we also have videos on technical analysis for trading channels too. Compounding interest. We talk about this a lot, but it's basically using your gains, reinvesting your gains over time has a compounding effect. Albert Einstein said it was the eighth wonder of the world. If you have never used it before, I say use an compounding interest calculator. Primarily on like MoneyChimp or something are the better ones. Conference call. This is just a call that happens quarterly when a company goes over their earnings on a call. There's Q&As. They go over everything that's happening. It's called a conference call. Cryptocurrencies, we know what that is. Day trading, buying and selling a security within a single day. Dead cat bounce. This is a good one. This is a type of event that occurs as part of a long-lasting downtrend in price. When the price falls significantly from a previous high, it may appear to bounce back or suggest a trend reversal of the downtrend. So this, a lot of people were watching as a dead cat bounce. We had this monster sell-off and then a huge bounce. Then normally what happens is we take another spill. A lot of people were like, SPY is going to be a dead cat bounce a couple months ago. Do you have a video over good dividend stocks? I'm trying to think if in the course we have one. In the courses, there is a lecture on how to tell if a dividend is a good dividend or not. I go over payout ratios. I go over percentages. There is one in the course, but not on YouTube. I could make one on YouTube though. But there is one on the course, Matt. Because you don't want to just see a high dividend. You don't want to get screwed by a high dividend. Some companies put out high dividends, but the company is trash. Like BP used to do, I think it was like an 8 or 9% dividend, but every year they would go down 10% as a company. So that makes no sense. You're still losing money. Good question. Diversification, allocating capital in a way to reduce risk. So say you got 20 grand and you're investing long term, don't put all 20 grand in Boeing. Don't put all 20 grand in Uber. Don't put all 20 grand in whatever it is. Always diversify. Some people say, I made one of my first videos was I think called Diversification is for Idiots or something. But a lot of people try to diversify a portfolio by like 20 or 30 or 40. Some people buy 100 companies. Don't do that. In my opinion, you cannot fully understand 10 or 20 companies. You can fully understand and stay on top of 3 to 5 companies. Dividend yield is basically the percentage of a dividend that you're getting. Dollar cost averaging. This is a great one. So for anybody who wants to long-term invest, but they don't really want to care about when's the best time to buy, basically you just buy Boeing, and then every week you buy Boeing. No matter what the price is, you just dollar cost average, and eventually over time you get a pretty good average price. Matt, family had put me in BP. Glad I sold. That's a mistake I have made too many times. I don't know which mistake, Leah. I forget which one I was just going over. But yeah, so let's keep going. EPS, or earnings per share, is how much earnings does the company have per share. So if a company is worth $10 a share, having too many companies, yeah, Leah, it happens because you're told to diversify, right? But the truth is you really only need about 4 or 5 real solid investments to become rich, right? If Uber becomes $500 a share in the next 6 to 7 years, that $25,000 investment I have will be worth $300-400 grand. You know, you only need 3 or 4 of those in your lifetime, maybe 5. It depends how much you want. You know. Oh, it's awesome. Thank you, Leah. Thank you, Matt. You guys are awesome. Okay, so earnings per share. If you have a $10 price on a stock and you have $1 worth of earnings, that's a PE of 10. So it's a good PE. So you want to see a good profit to earnings ratio, and we'll probably get to that in a minute. But earnings per share is a metric that divides a company's profit by the number of shares. Earnings report is when a company reports earnings. Economic bubble, when an asset class rises in value based on investor sentiment rather than the actual stat-driven analysis. Let me write this down because I want to make a video on this. What causes a bubble? I want to make a whole video on this because this is good. Okay, what is a bubble? We're not gonna do a full deep dive right now, but we'll talk about it. Tesla, talk about it a lot. Not that it is really a bubble at this exact second. Sorry, getting a whole bunch of messages. Not that it's a bubble at this exact second, but right here, right? Normally, what is supposed to happen in the stock market is investors look at the earnings, look at all of the statistical documentation, and they decide what the price of a company is worth, right? So when a company is going up based on statistics, that is right? That's how it should be. But then there are times where Bitcoin in 2016, when it hit $25,000 per coin, Tesla, when it ended up ripping, hold on, let me go back. Tesla, when it hit $1,000 a share in 3 or 4 months, what happens is people don't invest in a company based off of what it's worth. They base off of their own sentiment, right? So if you look at everybody who started buying Tesla at $615 and above, and when everyone was like, Tesla, Facebook groups all over like, you got to buy Tesla, your bartender is like, you got to get Tesla stock, your barista is like, you got to get Tesla stock, everyone's telling you, get Tesla stock. Do you think any of those people actually read over every piece of financial documentation and said, you know what, after going through 250 pages worth of documentation, all the financials on Tesla, the 10Qs, the 10Ks, the investor packages, I think Tesla is worth X amount of money. I'm going to buy Tesla at X amount of money. No. Nobody did. And if they did, then they are not the best investor, but we can all learn. No, people just bought it because people told them to buy it. Matt, kind of like DKNG right now. No reason at all for it to be growing, but it is. Exactly. That's how a bubble forms. And then what ends up happening is once more financial documentation comes out, right, people realize like, oh, that's not worth that. It's not worth that at all, right? Look at what happened to BYND. Beyond Meat went from $45 a share up to $293 a share in like 2 months. That's a 400% return, and a bubble formed because people didn't know what the hell it was worth. And I'm telling you, the smart money, the real people who make real money in the market don't buy at those prices at all. And that's why the stock market died. You know, a lot of it was because of the Rona, but a lot of it was we had so many people investing, not even know what they were investing in, not even knowing why they were investing, not even reading. What you got to realize, and I should make a whole video on this too, there are more people trading the stock market now than ever. Ever. And so back in the day, you would have to actually be interested in the stock market. You would have to learn about the stock market. You would have to work with another human. You would have to have a broker. You didn't have a phone with Robinhood. You would have to call up Jim at TD Ameritrade and work with your broker. Your broker would sit down with you and be like, hey, Matt, what kind of investments are you looking at? What are you looking to do? And if you didn't want to work with him, you still had to call him. You couldn't just put your own order in 30 years ago. You'd have to call him and be like, hey, Jim, I'm looking to buy 100 shares of Uber. Can you put it through? And then maybe an hour later, he puts that order through. But now any person can just download an app and start putting money into the market. And the sad thing is Nobody really learns about the market before they put their money in. They just start investing in stuff and they don't understand why or what it's worth. Matt, let DKNG do that once and I'll take my initial money out of it. But see, that's the thing. You understand that. You understand that it's a bubble and nobody knows, right? That's not a problem. You can still trade it off of the thought that, maybe it'll take a big move up. But yeah, that's what a bubble is. I'll do a whole video on it because it's really important and people don't understand that. FANG stocks. So these are stocks that are Facebook, Amazon, Apple, Netflix, and Google. They're the biggest stocks basically in the stock market right now. If you've ever heard of FANG, that is them. Now, for those of you, FANG is not FANG. So if you're trying to invest in the FANG stocks, it's not FANG. Leah, I'm very risk averse, so I have someone manage my 401k, and right now I'm learning my own money. I can afford to lose. Yeah, that's amazing, Leah. I think that more people should invest their own money and take the time to learn about it. 401ks are great. Roth IRAs are great. But one thing people don't understand is the way that you can compound your profits, you also compound your fees over time. So even a 1% fee, a 2% management fee can end up losing you hundreds of thousands of dollars 60 years from now. Which I'm not saying don't take your money on, just put whatever you want into the market. I'm not saying that, but everybody should learn on their own. All right, float. The number of shares issued by a company which are traded without restriction on a secondary market. If you ever hear low float, that is a stock that does not have a lot of shares. So we could manipulate a low float company. We have 200 people in our academy. Say between 200 of us, we have $1 million. We could manipulate a low float company like an MVIS or something like that. Gap down, gap up. These are when you're looking at a daily when there's a gap. So this right here on FANG was a huge gap. That means that it closed on 3.6 at $48 and opened the next morning at $30. Now there's always a saying, all gaps need to be filled. Which, look what exactly happened. We filled this gap. So it means eventually it'll come back and it'll fill it up. So there's a gap up and gap downs. Golden cross and a death cross. We'll go over that too. So in the world of moving averages, if you guys don't understand, Christopher Chance, what's up, brother? Hey, Peter, how do you figure out the best stocks to trade? Is it by talking to friends, news, the stock market, predictions, curious, new to stocks? What's up, Chris? So here's the thing, right? This is very, very, very mean of me to say, because not mean, I want to say odd of me to say, because I run a private community. I tell people what I'm trading. I show them what I'm trading, but I would honestly tell you to not listen to anybody that you do not respect and that has proven that they know what they're doing. Don't listen to your friends. Don't listen to Facebook groups. Don't listen to the news. If you're going to listen to people, listen to accredited people who have been doing this for years and years. You don't have to listen to me, or learn yourself. I would say, Chris, what's your plan? Are you planning to trade stocks? Are you planning on? Oh, you said trade. Okay. Don't listen to other people. Unless there's somebody you would switch places with. If it's a Facebook group, don't do that. Because you got to think, a lot of the times, people don't want to help other people. It's really bad. But that's why I started this community, because I wanted to help other people. But these Facebook groups are like, get into this penny stock. Not because they're like, hey, Chris, I really want you to make money. It's because they're losing a ton of money and they don't want to look like an idiot alone, if that makes sense. As far as what I'm not trying to get super salesy here, but I do run an academy. I talk about my strategy. Oops, sorry. Let me get out of this. As far as learning the best stocks to trade, I would say, first of all, start with a paper trading account. Don't even trade real money yet. I say build the skill, the money will follow. It's true. If I gave a new trader $100,000, doesn't matter how much money they have to learn the skill. So I would learn to paper trade. I would learn to use Thinkorswim by TD Ameritrade, and I would use their paper trading. A lot of things to find out to trade are going to be based off of technical analysis. I have some videos on Facebook that you'll see that was called Technical Analysis. If you type in Peter DeCarlo Technical Analysis or look at my channel, that's basically what this is. It's chart reading, learning how to read a chart. Now, if you look at this and you don't know what the heck is going on here, it's not as hard as it may look. Now, like in a stream, I can't tell you like exactly what to do and like this is how you do it. But I would say start learning technical analysis, start learning what moving averages are. My best advice to you would be trade bigger companies. Don't trade penny stocks. Don't trade pump and dumps. Even if you can make 300% in a day, don't do it. Trade bigger companies. Trade with paper. Document every single thing that you do. Look back at everything that you did and see what you did right, see what you did wrong. And realize this is a long game. It's a long game. I've been doing this for 6 years. I'm going to be doing it for another 30, 50, 60, 100 years, hopefully. It's a long-term game. And just be a sponge, man. Just be a sponge. But realize that if something is too good to be true, it probably is. That's the biggest thing. Matt, if by any chance you're not in this group, I 100% recommend giving it a shot. Peter invests crazy time into us and holds us accountable. Thank you, brother. That means a lot to me. That's what I wanted to do. It's hard. It's hard because I was talking to some students today, and they're getting solicited on Facebook. Some people are like, oh, buy my course, buy this. That's why I hate that, like, I sell a course because I don't ever want to sound like that. Some people are trying to get you to attach your portfolio to theirs, and they'll trade for you, which is obviously you're going to get scammed. But the biggest thing is, like, just I don't know. It's sad because a lot of people who, and I look at myself, a lot of people who get started in the market want to make money. They want to quit some job they hate. They want to provide for their family and the loved ones that they care about. They want to build a skill, and they want to make money fast. Like, I was sick of being poor. Shit, I'm still sick of being poor. Like, obviously, the more you grow, the better and better it gets. And I'll tell you, money does not change anything. It really doesn't. The more money you get, the more money you want. But you have to look at it realistically and look at it as a skill. If you play baseball, if you play football, if you play a guitar, if you're a top video gamer, anything. You didn't just do it in a day. And if you could have done it in a day, then you were doing something wrong, like shooting steroids or doing something that's not going to last you a long time. So just realize before you get into this, it's a great way to make money. It's a great way to make a living. It's one of the most rewarding things I've ever done in my life, but it takes time and dedication. And I think that if you go at it the right way, Chris, you'll kill it. Matt, that's why I always start by directing them to Facebook to see it's legit. Had someone hit me up yesterday about making money on crypto. It just blocked them. Yeah, and it's sad, but sorry, it was a motorcycle. It's sad, but like, put it this way. They're selling a course, and they're selling that crap because they can't make enough money trading. That's the truth. That's why I didn't want to sell a course. I make more money trading than I make off the courses and than I make off of this mentorship program. And I'm doing it. And I'm not saying like I'm the best guy, because hopefully I can make a couple $100,000 a year off this. That would be amazing, right? But I'm doing it because I want to stop the bull. I can't curse when it's public, but I want to stop that. I want to give people a realistic aspect to trading and investing, and not just have somebody come try to invest in penny stocks, blow up their account, lose all their money, give up, and tell everybody that trading stocks is for losers, and you're an idiot if you do it. But thanks for being here, Chris. Hit the like button and subscribe. It helps. Oh, before I start going sideways, let's talk about a golden cross and a death cross. There's two of them. So in the world of moving averages, we have your three main averages, and I'll go over them. It's your 50-day moving average. This is your weakest moving average that you have. Thank you, Chris. That means a lot. This is the weakest moving average that you have. Then you have a 100-day, which is the second weakest. Then you have the big boy, which is a 200. Your 200-day SMA is going to be the strongest one that you have. So it's going to be your strongest level of support or your strongest level of resistance. Talk about it all the time. You can make a living trading off of just the 200. Now, a golden cross is when your 50 crosses through your 200 to the upside, and it shows a bullish move. So you can see that from the time that we crossed on the 200-day SMA on, 15 days later is an 8% move. That's a bullish move. Now you have to realize that indicators are lagging, but let's look back here. And this is a death cross, and boy was this a death cross. So when the 50-day SMA crosses to the downside, like threads through it to the downside, that is a death cross. And we can see from the time that we crossed here to lows was a 32% move. So a lot of people live and die by the death cross and the golden cross. The Federal Reserve, that's a good one. So the Federal Reserve is just a centralized bank. It's basically all it is. They are there to stimulate the economy, to keep the economy in check, to raise interest rates when the economy is doing good, to lower them when it's doing bad. They're there to just kind of like help. They're kind of the referee of the world economy. Fibonacci channel. I talk about Fibonacci's a lot. It is a ancient Fibonacci math is like an ancient math, but you can do this by you take your highs, and I'll make a whole video on this if you're part of the academy. We have a whole section on it. If you right click at the high and you drag the indicator down to the low, it will make, based off of math on the time frame, this specific algorithm, it will make a support and resistance lines. And you can see that ironically works pretty well, right? We had 3 points of contact here, 2 points of contact here, 1 point of contact, and it's really a really strong indicator if you are going to be swing trading. Talked about float. There was another one I want to talk about. Forex. Forex is just foreign exchange market or currency. So you can buy foreign currency and trade for foreign currency. That's the new Bitcoin, that kind of stuff. Sebastian, sorry I'm late. Glad to have another stream today. What's up, Sebastian? We're just going through stock market terminology. We're only on F, so you didn't miss much. Fundamental analysis. We kind of talked about how bubbles occur and happen. Fundamental analysis is when you analyze fundamentals. So technical analysis is when you analyze technicals, which is candlestick charts. Fundamental analysis is when you analyze balance sheets, income statements, earnings, because they're fundamentals of a company. That's called fundamental analysis. Talked about gaps, hedge funds. This is just basically a company that has a fund that is a goal to create an absolute guaranteed return for investors. So if I had a hedge fund called Capitalist Academy Hedge Fund, all of you could give me your money and I could invest for you. I can't do that. That's illegal for me because I don't have a Series 7. I think you need Series 7 and you need to be in compliance with the SEC and stuff. High yield dividend stocks. This is just a company that gives you a high return on a dividend. Be wary. Like I've said before, just because a company gives a huge dividend, it might be a terrible company. Usually there's a reason that they need people to stay around. Inflation, the general decline of a currency's purchasing power. Right now, inflation I think is like 2.6%. So if you put $100 in a school bag, and you came back next year and you were to take that school bag out, even though there's $100, it would only really be worth like $97.60 in buying power because the cost of goods go up and up over time. IPO, or initial public offering, look at DKNG, is when a company goes public for the first time on the New York Stock Exchange. Intrinsic value, this is just a statistic that determines if a company is overvalued or undervalued. Liquidity, the best way to give you an example of liquidity is how easy you can sell something, right? So I'll ask you, what's more liquid? A stock or real estate? What is more liquid? You guys answer that question. We'll keep going. Lockup expiration period. This is when a company goes IPO. And there's a time frame that original investors cannot sell the stock because they could crash the stock. So when a lockup period expires, they can sell it whenever they want. Stock, exactly. So Sebastian says stock has a better liquidity because it has lower barriers to sell. There's always somebody there to buy your stock. If I wanted to sell real estate, it would take me just a month to close a deal. I'd have to find a buyer. We'd have to agree on a price. Yeah, so liquidity, the better the liquidity in general, the better, because you want to be able to get out of something. Management fee, compensation for managing your funds. Talked about that with a 401k. Peace Pete, can you post this link on the page? Yeah, brother. I'm gonna post this under the replay streams, and it's gonna be on YouTube. It's gonna be public. So don't worry, you'll see it. I love this is a market term, marijuana stocks. It's a stock that has to do with marijuana. Margin. Do not trade margin. Please do not trade margin. Collateral supplied by a trader and their broker. So you need to have a margin account. I would say have a margin account. Don't have a cash account, but do not use margin. Basically, it's just a loan that you have to pay back, and if you lose it, you're screwed. Momentum indicators. So there are a lot of momentum indicators. The MACD is one of the biggest momentum indicators. Every single time the MACD crosses, it shows momentum in the direction of the cross. If you guys don't know how to read them, it's in the academy, the private academy. If you guys want to join the private academy, I will post it. You can comment on the video once it's done, and then I can post the link there. Let's see. Market cap. This is a good one. The value of all of the outstanding shares of a company. So higher market cap, usually bigger company. Yeah. Don't worry, Mosh. I thought that was you, Mo Money. Talked about that. Momentum investing. There are a lot of people who invest just in momentum movements. I don't always do that. Moving average. We talked about that earlier. There's different ones. So there's your 3 here on mine, which are SMAs, which is a simple moving average, and then you have an exponential moving average, which is the blue one. Tons of videos on that. Moving average convergence divergence. We talked about that. That is your MACD. That's what MACD stands for. Moving average convergence divergence. Net margin. Okay, net income. It's actually good. So net income is basically how much money a company made after all of their expenses. Like taxes, payables, all of that. Operating income is the income of a business after deducting operational expenses. So net has to do with taxes. After taxes, operational income is how much money they made after they deducted operational expenses. Options trading, we talked about that. That's the sale of buying or selling a contract which allows the purchaser to have the right. If you want to learn about options, you can check out the video I posted earlier in the chat. Dude, my neighbor's dog has to be quiet. We have a stream going on. Oversold. That's just when a company is oversold. One of the easiest ways to tell that is oversold or overbought, which is on an RSI, which is a relative strength index. When it's blue, it's oversold. When it's red, it's overbought. Penny stock. For some people, a penny stock is a company that is worth pennies a share. By the SEC, it's actually $5 and below. So GoPro is a penny stock right now. PE, which is a price to earnings ratio. So that is the price of the stock to the earnings. So we talked earlier that if a share of a company is worth $10 and they have $1 in EPS, which is $1 of earnings per share, you divide them, that is a 10. So $1 in earnings, $10 price, your PE would be 10. We talked about put option. You think the stock is going to go down. If you want to learn about that, like I said, I put that link on options. Talk about range trading. Real estate investment trust. So you know how you have an ETF? An ETF is an exchange traded fund. For those of you who do not know, we actually didn't go over that. An ETF is an exchange traded fund. Think of a folder or a basket that has a whole bunch of different stocks within it, and instead of buying those different stocks on your own, you buy an ETF which holds all of those different stocks. Well, there's also things called REITs, which is a real estate investment trust. So you could buy a stock, and that stock might own 5,000 commercial real estate properties throughout America, right? And there's different REITs for different things. There's REITs for nursing homes and assisted living. There's REITs for, I shouldn't be giving the finger. I didn't mean to. There's REITs for, commercial real estate. There's REITs for, I don't know if there's flipping REITs, but there's REITs for like office buildings. There's REITs for doctors' offices. There's REITs for commercial high-rise apartments. There's basically a REIT for anything. Recession, we talked about this. A downturn in the economic activity. It has to be declining for 2 months of GDP. Talked about relative strength index or resistance level. It's basically a price point where a stock is getting resisted and cannot break through. We can look at Boeing back in this trading range. You can see here we touched this resistance level like 3 times. So $382 would be a resistance. A support would be $324. We bounced off of this price level 3 times. If you guys have any other questions, I'm going to keep going through these. If you have any other ones you want me to go over that I haven't gone over, let me know. This is a good one. Risk tolerance. How willing an investor is to take on volatility and variability in their investment returns. So I am very risk tolerant. I have a high tolerance for risk. If you're somebody who just started trading and the thought of losing $100 in 2 minutes, you are not risk tolerant. There's nothing wrong with it. You become more risk tolerant the better that you get and the longer you've been doing it. I remember the first time I lost like $30 in a minute and I freaked out. Now if I lose or make $30 in a second, it's not a big deal. But risk tolerance is very important, especially with building position sizes. The S&P 500 index, or SPY, is the 500 different large cap companies that are listed in the Standard & Poor's index. A stock split. This corporate action increases the numbers of shares. So a stock split would be, I don't know why, a company like Google or all right, so here's one, like Tesla, right? Say Tesla said, hey, I don't want, because you got to realize this was bigger back in the day when there was no fractional sharing. There is fractional shares now where you could just buy a piece of Amazon if you don't have enough money. But what companies used to do is every single time, look at Tesla, right? If the price of a stock is high, it might deter some people from buying it. If you only have $800 to start investing, you can't even buy a single share of Tesla. So what a company would do is a split. So say this is not true, but let's say there's 1 million shares of Tesla trading at $1,000 a share. What they would do is now cut that in half, so the price of Tesla would be $500 a share, but there'd be 2 million shares out on the market. So say you owned 1 share of Tesla worth $1,000, you would get 2 shares of Tesla worth $500 a piece. They're just making the shares bigger, making the price smaller, but everything stays relative. Now the opposite would be, and this is never a good sign, if a company has a reverse split. Aurora Cannabis, ACB, just had this. A lot of times they'll reverse split a company or stock price so that this way they don't get delisted, because when a company gets so cheap, they delist the company. They take it off of the market. So say your stock went from $1 to a penny, and there's a million shares out there and they're worth a penny. What they would do is only make it 250,000 shares, but they're worth 4 pennies. So that's called a reverse split. That is never good. A stock symbol is just your symbol or a ticker symbol. So for Tesla, it's TSLA. Apple, it's AAPL. I don't even call companies by their name. I don't even spell them the right way anymore. I just do it by the ticker. It's pretty bad. But funny fact, actually, companies with cooler tickers actually get traded more. Statistically, it's really stupid. A stop order. So this is basically an order that you set to sell your stock when it hits a certain price. So say you were trading Boeing and you bought in at $120.50 and you wanted it to sell automatically, say when you're at work or on your vacation or you're just not looking, you want it to sell automatically at $94.40, you would set a stop order. Strike price when you're trading options is your exercise price. This is the price at which a buyer of an option can exercise his option. If you don't understand that, go back, check out the video in the chat that I put on options. Technical analysis, we went over that. Trade war and tariffs. So a tariff is a tax or a duty applied for a foreign good entering a domestic space. So with tariffs in China right now, if I were to buy this iPhone from China, I would have to pay 25% extra for buying it from China. The point of that is to negotiate trade deals or to force me to not buy goods from another country. And trading strategy, that is just your own plan to make profits in the stock market. A bunch of people have a whole bunch of different strategies and different things that they're going to do to make money. Like some people trade penny stocks, which you should never do. Some people trade oil and gas. Some people trade blue chips. Some people trade only electronic, like whatever your trading style is. Any questions before we wrap up? All right, cool guys. Before we get going, thank you so much. Hit the like button. What's up, Joel? That's an awesome last name. Arias says, "Hey, how often do you look for a short sell percentage? Oh, how do you look for a short sell percentage in a stock you want to trade, and why?" So I don't short sell. I buy puts. I can go into that primarily because if you're trading a put, you can't lose more than what you put up. If you're shorting something, you can actually lose more than what you put up. How do I look for a percentage in a stock that I want to trade? I don't know if you mean like what percentage do I think my option is going to go up, or what percentage I think a stock is going to go down. So I would say, I don't know if you understand technical analysis, but let's take a look at what's a position we took a couple days ago, Snap. So on Snap, we had this ascending wedge pattern here, which is a very bearish sign. We had a bearish divergence here. So if you guys don't understand, a bearish divergence is when the price of a stock is going up and up, making higher highs, and the RSI is making lower highs. You have an indiscrepancy. So you have the strength going down, but you have the price going up, and you have volume coming out of it. That doesn't make sense, right? That's not a good sign. Then you have this pattern where we're bouncing, kind of like popping a pimple. We get to the head of the pimple, and it dumps. And so what ends up happening is you end up having this squeeze that's occurring here, and then it ends up bouncing, and then we take a dump. And then so in this instance here, we have the squeeze, and then we take a fade down. So if you were to have purchased here and we were looking at what percentage we would have faded, that would have been a 4.5% fade. And then if we break this 50-day SMA, then we would take a fade down to the 100-day SMA. So from here to here, I would calculate, the other thing too, I get a lot of questions is like, what tool am I using to decide what percentage this is? This is a draw tool. So if you come up to drawings and you come over here to drawing tools and you go to the trend line, that's what I'm using. Or the easier way would be if you come down here on TOS and you click here and you go to this line and you can click drawing tool. And you can also have access like Fibonacci that I went over earlier. And you can click. And then you can click like say from, let's go back to Boeing. We were looking at here. if you were to grab from this channel to the top of the channel, from the bottom to the top, it'll actually tell you, I can't move my mouse, but it'll tell you how many days it took, how many hours it took, how many bars it took, what percentage it took, I mean, what percentage the movement was, how many dollars that was. So it was a $58.14 move, and it'll tell you the angle, which was a 32 angle. Don't really care too much about that. All right, cool, guys. I'm going to hop off. We're right over an hour now. Make sure you subscribe, hit the like button. Thank you guys for everything. I'm going to take tomorrow off. Going to hit the beach. Going to shoot a bunch of videos this weekend on Sunday, though. And I will see you guys next week. Peace. Have a good night.